car payments, credit cards, and the illusion of doing well. Let me start with an uncomfortable observation. In most cities today, you can't tell who's financially stable by how successful they look. The nicest car in the parking lot is often owned by someone with the least flexibility, and the person who looks behind might actually be the one moving forward. That's the illusion many professionals live inside without realizing it. Let's take a very ordinary situation in the US or Europe. You're in your late 20s or early 30s. You have a degree, a steady job, and your income looks respectable, around $65,000 to $75,000 in the US, or maybe 45,000 to 55,000 euros in parts of Europe. On paper, you're doing well. After tax, that's roughly $4,000 to $4,300 a month hitting your account. Not rich, not struggling. Then reality steps in. Rent or mortgage takes about $1,400 to $1,700. A car payment or lease, $400 to $550. Insurance, fuel, maintenance, another $250. Student loans or EMIs, $300. Credit card minimums, maybe $150. Subscriptions, phone, internet, utilities, $300. Before food, savings, or anything unexpected, you're already close to $3,000. And yet, from the outside, everything looks fine. You have a decent car, a modern phone, a place that feels adult, occasional dinners out, maybe a short trip once or twice a year. This is where the illusion begins, because nothing here looks reckless. The system doesn't sell debt as debt anymore. It sells it as identity. A car payment isn't framed as long-term cost. It's framed as what someone like you drives. A credit card isn't positioned as borrowing. It's positioned as convenience and reward. The question isn't, can I afford this? It's, does this fit the life I'm supposed to be living? Let's slow this down with simple math. A $40,000 car financed over 6 years might feel like a $600 monthly decision. But after interest, insurance, fuel, maintenance, and depreciation, that car quietly consumes well over $60,000 of after-tax income. That's not a failure of discipline. That's a failure of framing. Because monthly payments hide totals, and totals are where financial reality lives. Credit cards work the same way. A few hundred here, a few hundred there, always manageable, always justified, until a portion of your future income is permanently spoken for. Not dramatically, just consistently. So why do smart, educated professionals fall into this? Because status today isn't loud, it's subtle. It's not luxury watches or mansions, it's normal-looking success. A clean car, a presentable lifestyle, a sense that you're keeping up. The pressure isn't to be wealthy, it's to avoid looking like you're falling behind. And that pressure pushes people into decisions that feel safe individually, but heavy collectively. The long-term cost of this isn't financial collapse, it's immobility. Years go by, income rises slowly, expenses rise quietly alongside it. You earn more, but nothing feels easier. Opportunities feel risky because fixed payments don't care how you feel. That's how people end up earning more than ever, yet feeling strangely trapped. What financially intelligent people do differently isn't dramatic. They don't reject comfort. They don't live in extremes. They simply understand that looking stable and being stable are not the same thing. They think in total cost, not monthly comfort. They value flexibility more than appearances. And they understand that every payment you lock in today limits the choices you'll have tomorrow. Not out of fear, out of clarity. If you've ever felt like you're doing well but not moving forward, it's not a personal flaw. It's a system built around appearances, not outcomes.